Hi, welcome back to economics, and we will be discussing the national taxes in this chapter. So we have learned from the previous chapter the general characteristics, the classifications, and types of taxes. In this chapter, we will go further on the national taxes imposed by the government, specifically the income tax. It is very important to learn the basics of income tax and how it is computed, since you will be eventually paying your taxes each year. Um, this is also very important, or it's very useful in order for us to have a better understanding and appreciation of the concept of taxation. And there are two kinds of taxes under the existing laws of the Philippines. We have the national taxes and we also have the local taxes. National taxes are imposed by the government through the National Internal Revenue Code and other related laws such as tariff and customs code. The local taxes, on the other hand, are those imposed by the local government code, right? Since we hence the term local taxes, so that is imposed by the local government code. And some of these are the real property tax and the community taxes for the local taxes. So we will discuss the national taxes because it has a bigger scope. um, what are the national taxes? So first and foremost is the income tax. So for the income tax, that's actually the tax that we pay for the income that we earn, for the revenue that we earn on our business. Second is the estate and donors tax. We also have the value added tax. We have already discussed that in the previous chapter. We also have the other percentage taxes for these enumerated here. Hotels, carriers, keepers of garages, dealers in securities and lending, investors, overseas communication, banks and non-bank intermediaries, caterers, franchises, winnings, finance companies, insurance companies, and amusements. And fifth is we have the excise taxes on certain goods like tobacco, wine, cigarettes, etc. And then we have the documentary stamps. The documentary stamps that you buy when you go to the notary public for notarizing your document. Number seven is other taxes that may be imposed by law and collected by the Bureau of Internal Revenue. Other taxes will be based on the special laws that were created, which are listed here, like the PD number 1464, which is the tariffs and customs duties, the sugar adjustment taxes, taxes on narcotic drugs, travel tax, private motor vehicle tax, and energy taxes. So those are the seven major um, types of national taxes. Okay, so we will be focusing on the income taxation because in taxation, income is defined as all the wealth that flows into the taxpayer's assets, your assets or my assets, other than as a mere return on capital. So any income, any wealth that goes into my assets. Then for capital, capital is applied to investments from which income is derived. So these are the investments that you make, a businessman or an individual. It is imposed to corporations or individual incomes in excess of the specified amounts. Of course, there are deductions and there are also exemptions. So any excess of that is going to be taxed, right? Taxable when we say taxable. So we have to classify the terms in income taxation, or we have to know the terms in income taxation. First is the taxable income. When we say taxable income, this is the gross income after the personal and additional exemptions have been deducted. So we will discuss the personal and additional exemptions later. So but when we say taxable income, that is the amount of your income that is going to be taxed. Passive income. Passive income, this applies to income from interest of banks. So if you have deposited amount if you have a deposit in any bank, it will be earning interest. So that's a passive income. You did not do physical work to earn that money. The deposits, your dividends are income from your investments. So if you buy stocks or if you buy mutual funds, you have dividends. Royalties, or these are the amount that you pay for, let's say, if you're a singer and they are using your music, then they are going to give you royalty fee. Prizes, of course, if you join contest, and other winnings. Gross income, on the other hand, it refers to all income, regardless of kind or form, derived from any insurance. So, gross income, that's your overall income, regardless if where it came from. And then we also have the net income. So, net income is different from the gross income because gross income is the whole amount that you earned, while the net income is the gross income minus the allowable deductions that have been subtracted from your gross income. Okay, but these are not included. There's these are this The net income is not including the life insurance, the amount received by the insured as the return of premium, gifts, requests, devices, compensation for injuries or sickness, income exempts under treaty, retirement benefits, pension or gratitudes, or the tips if you are into the service industry. Those are not included in the net income. So those are the terms that we have to know when it comes to income taxes. And we will also have to, as promised, we will discuss the deductions. What are the deductions? These are the amounts that the law allows to be subtracted from the gross income. So if you have a gross income of 100,000, we are going to deduct there the exemptions and the non-taxable amount from your salary or from your income. So the example will be the optional standard deduction like the SSS, PhilHealth, Pag-ibig, medical insurance, itemized deductions, let's say for example mortgage or medical expenses, right? Business expenses, the interest rate if you borrowed money, interest, taxes, those are not those are the deductions or example of deductions, losses, bad debts, depreciation of properties. When we say depreciation of properties, this happens, let's say for example, if you bought a car worth 1 million pesos today, that car will not be, or the amount of that car will decrease. 2 years from now, it will not be 1 million anymore. It will be like, depends on how you are going to give value to the depreciation. It can be 800,000 already after 2 years because that same car, when you bought it, is brand new for 1 million, but you used it already, the wear and tear of the car, that is the depreciation. So the value of the thing depreciated, it decreased. Then depletion of property. So it's kanang nahurot. Charitable and other contributions. So if you did charitable institution, if you donated, that will be deducted from your gross income. And then of course the trust funds. Okay. So those are the deductions that you are going to see in your income tax if you are going to file for income tax return, right? And let's check what is the taxable income because we have already mentioned this in the past. So the taxable income refers to the gross income minus the deductions allowable by law and the personal and additional exemption. So we have personal, we also have additional exemption, which we will discuss later. So we have to clarify first who are the taxpayers. So we have already discussed this in the previous chapter, but to provide emphasis, the taxpayers are the individuals, the corporations, and general partnerships. Individuals that can be a Filipino citizen who is either residing here or abroad, as long as they are Filipino citizens. So that's resident or non-resident. Aliens, those are the foreign um, people, foreigners. It's either they are residing here or they are not residing here. Corporations, domestic or foreign. So if we say domestic corporations, those are incorporated under the Philippine laws. So they are uh, incorporated here. When we say foreign corporations, those incorporated under the laws of their respective countries, but they are operating here in the Philippines. Okay, so those are foreign corporations. Next is general partnerships. We have two types of general partnerships. We have the professional partnership and the general co-partnerships. When we say professional partnership, this refers to a partnership based on their practicing their profession. No, since we have the term professional partnership, so they are practicing their profession. Let's say, for example, a law office, a partnership, no, or a clinic, okay, which is a partnership. Meaning, if it's a partnership, it is owned by two or more. Because if the business is owned by one person, we call it sole proprietorship. So there's only one owner. If there are more than one, like two or more owners, it is called partnership. When we say corporations is owned also for of more than one owners, but this time the owners are shareholders or stockholders, not partners. Okay, so that is the general professional partnership. And the other one is general co-partnership. So any partnership that is conducting business. The That's the other partnership. So these are the taxpayers. Now we have to discuss also the status of the taxpayers. So before there are only we only have married and single status. So you just put married or single. This time we have the head of the family. This is actually due to the amendment, we already have the head of the family. So if we say married, this is an individuals who are legally and lawfully married with or without children or with legally adopted children. So they are married, they have their own children or they adopted. The head of the family is any unmarried or legally separated male or female with one or both parents, or one or more brothers or sisters, and one or more legitimate or recognized natural or legally adopted children living with them and are dependent upon him or her for their substantial or primary support. So, any unmarried person legally separated who has someone depending on them. No? So, you are categorized as, or your status will be the head of the family. Number three, single. So, any unmarried widower is included, the balo and the byudo and byuda in Bisaya, or a married person who is legally separated or annulled with no qualified dependents. So no one is depending. You're still single, right? So these are the status of the taxpayers. Now, these taxpayers before, they have like, they have exemptions which are different from each other. But due to the amendments, it was uniform already. So it's true to all, um, regardless if you are single or married, you have a personal exemption of 50,000. So if you are single, married, or head of the family, you have automatically get 50,000 personal exemption in your income tax return. But if you are a head of the family or a married person and you have dependents or you have children, you will get an additional exemption of 25,000 pesos each dependent, but it should not be more than 4 qualified dependents. Okay, so the maximum dependence or the maximum additional exemption for married and head of the family is 100,000 pesos. So if you have one dependent, that's 25,000. If you have two, that's 50,000. If you have three, 75,000, and four, 100,000. But if you have five children, there's no more additional 25,000. The maximum is only 100,000 or maximum of 4 qualified dependents. Now let's go to tax rates. So in this is the table for the tax rates. We have here 0 to 10,000 pesos, you'll pay 5% tax rate. If your income is from 10,000 up to 30,000 pesos, your tax rate is 500 pesos plus 10% of the excess of 10,000. So let's say for example your income is 15,000. So there's 5,000 excess. So therefore 500 plus 10% of 5,000, right? If your income is 30,000, between 30,000 to 70,000, so that's 2,500 plus 15% of the excess of the lower amount, which is 30,000, and so on. So that's 85 plus 20%, 22,500 plus 25, um, 50,000 plus 30%. And if your income is more than 500,000, your tax rate is 125,000 plus 32% of the excess of 500. So if it's 1 million, if your income is 1 million, so 1 million times minus 500,000. So your tax rate is 125,000 plus 32% of 500,000. Okay, so I hope that's clear. Now, how are we going to compute for our income tax or annual income tax? In order for us to do that, we have to um, we have to get the annual income, or there are things that you have to know for you to be able to compute. And what are those? Number one, we have the monthly income. So that's what you are getting paid every month. Then you have your tax exemption. When we say tax exemption, these are the deductions for SSS, PhilHealth, Pag-ibig contribution, or if there's GSIS for the government employees. So those are tax exemption. Personal exemption, these are the deductions that we have discussed earlier. 50,000 for each individual, regardless of your status, if you're single, head of the family, or married. And you have 25,000 per qualified dependent, not exceeding 4. Okay, so these are the things that you have to know in order for you to compute for your annual income tax. So how are we going to compute? For for us to know the annual income tax, we have to compute first the gross taxable income. And how are we going to do that? For we have to get our gross income. The gross income is your monthly salary times 12 months. So that's your gross income minus the tax exemption that we've discussed in the previous slide. We have the SSS, PhilHealth, Pag-ibig contribution, GSIS if you have, times 12 months. So that's for the whole year. And you will get your gross taxable income. Okay, after we get the gross taxable income, we have to get the gross net income. And how do we do that? We have to subtract the personal exemption, which is the 50,000 plus 25 for each dependent from your gross taxable income. And that is what you get, the net taxable income. So after we get the net taxable income, we also have to get the taxable amount. Okay, and then we can get the amount due, which is your tax. So to illustrate, we will have an example here. So we have Mr. Crisostomo. He is single, works as head nurse at St. Matthew's Hospital. For the taxable year of 2020, so that's last year that he should have paid already April. He received the following income. His basic salary is 25,500 per month. Okay. So from his salary, he incurred deductions for the SS contribution, which is 350 pesos per month, Pag-ibig 400 pesos, PhilHealth or Medicare 200 pesos. That's a total of 950 pesos per month. So we have the income, the basic salary. We also have the deduction, which is the 950 pesos. Now we can compute for the gross taxable income. So to compute the gross taxable income, we have to get the basic salary times 12 months. So that is 25,000. Actually, this is 25, yeah, 25,000 times 12 months. So that's 306,000. Then the exemptions or the deductions, 950 times 12, that's 11,400. Gross taxable income, so that's 294,600. So we already have the gross taxable income. Now let's go to the net taxable income. So how do we compute that? This is the gross taxable income. This is how we're going to compute the net taxable. So we have gross taxable income, which is 294,600 minus personal exemption. He is single. He doesn't have any dependent. So that's 50,000 uh, personal exemption. So 294,600 minus 50,000, the net taxable income is 244,600. Okay, so we already have the net taxable income. Now, let's determine the annual income tax due. So how much is going to pay for the income tax? So you remember we have a table. This is the rates for the taxes. So his net taxable income is 244,600. And how much is he going to pay? So he is under bracket 5. So this is bracket 1, 2, 3, 4, 5. His income is in between 140,000 and 250,000. So therefore, the amount that he is going to pay will be this, right? So how are we going to do that? We will have 22,500 plus the 25% of the difference between 244 minus 140. This is the baseline. That's 22,500 plus 25% of 104,600, and that is 22,500 plus the 25% of this is 26,150. Therefore, the annual tax due is 48,650 pesos. So that's the yearly amount. And as a general rule, employers automatically withhold taxes, meaning they keep it from their employees' income every month as reflected in their pay slips. So they do not deduct the whole amount of 48,000. They only deduct it on a monthly basis. And at the end of the year, the employers are the ones to file and pay for the income tax of their employees. Any excess of withheld taxes is refunded to the employees. So why are there sometimes they are refund, sometimes they still add more amount for the taxes because there will be excess and shortage shortage because you don't know within that year. So let's say, for example, if you are a woman, you got pregnant, so you have to have a maternity leave. So those maternity leave, you are not being paid, but you are getting uh, maternity allowance from SSS. So that one is not compute. It will not be included in your taxable amount, right? Because you are not being paid by the company. So sometimes the employer actually just keep on deducting regular amount every month. And when the actual computation at the end of the year, that's when they will be able to determine the actual amount that's due. So therefore, sometimes it's in excess. So any excess will be refunded to the employee. If it's short, then they are going to deduct from the next salary for what is lacking on uh, the taxable income, or I mean the tax amount due. And this will be, you can see it in the BIR form number 1700, right? So since they are deducting monthly, so in the case of Mr. Crisostomo, his annual income tax is 48,650. How much they are going to withhold every month? The answer is 4,054. How did we do that? That's 48,650. You just have to divide it by 12 months. So that's 4,054. Right? So every month na ay withhold ang company ng 4,000 from him. And any excess will be refunded, or if there's any shortage, they are going to add another tax deduction on the following payslip, right? So another example is we have Miss Halushos, a single parent working at Magnus Eventus Incorporated. She has three children: Joshua, which is 15 years old, Eugene, 12, and Rain, 7. So, and she has a basic salary of 12,000 per month. From her salary, she there are deductions for SSS, which is 400 pesos a month. We have Pag-ibig, 400 pesos a month. PhilHealth, 200 pesos. That's a total of 1,000 pesos a month. So let's go ahead and compute the gross taxable income. Gross taxable income, we have 12,000 times 12 months, so that's 144,000, minus the 1,000 monthly contributions times 12, that's 12,000. The gross taxable income is 132,000 pesos. Now let's go to the the net taxable income. So net taxable income is the gross taxable minus the personal exemption, which is 50,000, minus she has additional deductions because she has dependents. She has three, so therefore that's 75,000 deduction. So from 132,000 minus 50,000 minus 75,000, the remaining amount is 7,000, which is the net taxable income. So if we are going to go back to our table, 7,000 belongs in the first bracket, which is 0 to 10,000. If that is the case, Miss Halushos will pay 5% only of the net taxable income because that's the bracket. So the amount tax due is 350 pesos. So out of 7,000 times 5%, that's 350. Now the question is, how much, what is the amount, the monthly withholding tax of Miss Halushoso? How much is her employer will deduct from her salary every month? So what you are going to just do is 350 divided by 12. So that's your monthly deduction for taxes. Okay. So I hope that is clear. And additionally, there are people that are not required to pay tax, and there are also people that are required. So, of course, we already know the people that are required, those individuals, resident and non-resident, aliens, resident or non-resident, corporations, partnerships, right? So as long as they are engaged or they are getting their income in the Philippines, they are required to file income taxes. Who are the people that are not required? The people that are not required, first is any individual whose gross income does not exceed, or the gross income is less than the deductions. Okay, remember you have a personal deduction of 50,000. So if your gross income in a year is below 50,000, meaning you don't have to pay for an income tax because say 40,000 minus 50, so that's negative 10. You don't have to pay. But if it's more than 50, then yes, you are going to pay. Say your monthly or your annual income is 60,000 and your additional exemption is 50,000. So that's 10,000 remaining. So you are going to pay a tax which is equivalent to 5% of the 10,000 based on the table. And another is any individual who are earning through compensation. No, pure compensation. It's not a salary. It's not regular income. As long as it does not exceed 60,000. So you're only getting allowances or as long as it's not regular and less than 60,000, you don't have to pay for tax. Another one is individual who are whose income consists purely of interest rates, prices, royalties. So those people, they don't have to pay because those who the burden, the tax burden is not on the winner, it's on the organizer. So the organizers are the one who will be charged for tax on the amount that they donated or they gave as prize. Fourth are the individual who is exempt from any under any tax code or any other laws, right? So if it's there are special laws or there are special tax code that they will be uh, exempted. Let's say, for example, indigenous people, right? Or um, religious religious activities or charitable activities, those are not required to file taxes. Non-government organizations that are doing charitable work are also exempted to file income taxes. So, those are the ones who are required and not required to file taxes. But for those who are required to pay taxes, you have to take note that the government actually file or impose what do you call that, penalties, right? Surcharges. So we will discuss that, but we have to discuss first the where and when of the tax payment. So when you are going to pay it every 15th of April every year. So let's say for example your income for 2020, you are going to pay that April 2021. For my income this 2021, I will pay the income tax return April of 2022. Okay, so that's how it works. And the place where, so of course, it should be on the authorized people. You should have to do it through the authorized people, like your revenue district officer, revenue collection officer, or any authorized agent bank, um, duly authorized treasurer of the city or municipality, as long as they are authorized by by IR to receive the payments or file your income taxes, then you're good to go. Because there's also a penalty if you are not paying it in your authorized revenue district. So let's go to the penalty, surcharges, and interest. So you will be charged surcharges and interest if you have falsely applied or filed it false or fraudulent tax return, which is done willfully, meaning gituyo, right? So you will be paying 50% of the tax deficiency. So if your tax deficiency is 100,000, you're going to pay 50% penalty. So on top of the 100,000 that you owe plus 50% penalty, so that's 50,000. So 150,000 is the amount that you are going to pay for if you have filed it falsely or fraudulently. Number two, in case of willful neglect to file tax return within the time prescribed by law, you also have to pay 50% of the tax, right? Additional 50. In case of failure to file any income tax return, failure to pay the deficiency tax within the time prescribed, failure to pay the full payment of tax shown on any tax return required, or failure to file a tax return with the proper revenue officer, you will be paying 25% extra or additional on the amount due. Okay, so that's why you've heard, I mean, there are actually people who are not able to pay, so they have to pay for the penalty or surcharges that is imposed by BIR, right? So I hope that this is clear, and if you have any questions, you just post your questions or you post it in the classroom. And for your assignment that will be submitted next week, um, if Mr. A's basic salary, so you are Mr. A, your basic salary is 38,000 per month, and you pay 452 pesos for your SSS contribution, 506 pesos for your pag-ibig contribution, and 472 pesos for your PhilHealth contribution. So what is your annual tax due? And how much will be withheld by your employer monthly? So you have to show your solution. So to do the annual tax due, you have to find the gross taxable income, net taxable income, and then the amount, the tax due using the tax table that I gave you. And then you also have to show how much is going to be the monthly deduction that will be done by the employer based from what you have gathered, what you have come up with uh, from the amount of tax due, right? So again, you have to submit it next week, and thank you. Have a good day.